Okay, guys, this is the second lecture in chapter 1. Today I will continue discussing the concepts of the cost and managerial accounting. We discussed the difference between financial accounting and managerial accounting in the previous lecture. Now let's start with the cost classification. We discuss a summary of the cost classification, if you remember this slide, and I said that mainly the whole chapter is summarized in this slide, so we will discuss in more details what are the cost classification here, okay, or discussed here. Then the first classification for the cost are the direct costs and indirect costs. The meaning of the direct costs, these are costs that can be easily and conveniently traced to a unit of product or other cost object. Examples: direct material and direct labor. If we think about a product like a chair or a table, then we can decide what are the materials, and exactly we can say that the wood is a direct material for the table, which means we can decide what is the cost added to this table from the wood. The wood in this case is called direct material, and it is exactly calculated. So it will be easy and convenient to say that we have 5 JDs for the 1 meter of wood for a table. And similarly, if we are talking about the direct labor, which means we can say we need 1 hour to make a table, and this 1 hour needs for let's say 5 also JDs for the employee to make a table for 1 hour. So it is easy also and convenient to assign the cost of the labor for that table, and this is called direct cost. The word indirect cost, which is the cost that cannot be easily and conveniently traced to a unit of product or other cost object. The example, or the big example for the indirect cost, are the manufacturing overhead. Examples for the manufacturing overhead, or the definition first for the manufacturing overhead: these costs incurred and important to support a number of cost objects. These costs cannot be traced to an individual cost object. Example: if we use an electricity or tools for or to make the table, is it convenient? Is it easy to say how many minutes do we use for a single table? No. If we talk about glue, if we use it in the manufacturing a table, is it easy or convenient to say that much for glue to be used in the first table or the second table? No. So we are paying these expenses in a total, and then we distribute the cost of these expenses among the whole production. So it is not easy to say exactly how much paid to a specific table from that expense. Another example, if you like, if we're talking about depreciation, if a machine produces our tables, what is the depreciation exactly related to a table, to one table? So it is also hard. Another example, if we are talking about a supervision. Suppose that we do have many employees working individually for a table each. Then we do have a supervisor who spreaded the supervision among all employees. So what is exactly the expense or the time paid to a specific table? It is not easy to assign or to determine that much of time, which means that much of costs to be paid for a specific table. This is called indirect cost or manufacturing overhead. Manufacturing overhead. Okay. Learning objective number 2, identify and give examples of each of 3 basic manufacturing cost categories. A big title for this chapter is called manufacturing costs. If you think about manufacturing a table, what are the 3 components or important components to be added to the table in order to be a product or a table? We need direct materials, direct labor, manufacturing overhead, which is the costs important to make the table. Okay, so all of these 3 are important to make a table, and without these 3, we don't have a product or finished goods. The direct materials are raw materials that become an integral part of the product, and that can be conveniently traced directly to it. Example, a radio installed in an automobile, or the wood added to the table. This is called the direct material. It is easy to say we need 1 meter of wood to be added to the table, and this is called direct material. For our example here, it is we are talking about a radio in an automobile, or tires for an automobile, or seats for a car. Then we have to say this is an example of direct material, so it is easy to be traced to a specific product. Direct labor, which is the second component of the manufacturing costs. These costs are those labor costs that can be easily traced to individual unit of product. Example, wages paid to automobile assembly workers, the workers who are directly work in producing this product. If we are talking about the employee or the cost of the wages for the direct employee working on our table, this is called a direct labor. But if we are talking about a supervisor who watch the production, let's say, or supervise the workers, this is not a direct labor. This is called indirect labor. Why? Because the relationship with the product that we are producing. So the direct labor, those labor costs that can be easily traced, easily assigned to a single unit of product. The third component of the manufacturing costs is called manufacturing overhead. All manufacturing costs, and the keyword here is manufacturing. So all of these expenses or costs are dependent or talked about manufacturing process. So all manufacturing costs important except direct material and direct labor. And as we said before, these costs cannot be traced easily to a finished product or a single product. This includes, or the title manufacturing overhead includes indirect materials that cannot be easily or conveniently traced to a specific units of product, like the nails for a table, like the glue for a table, like some costs, some immaterial, let's say, immaterial costs added to the car. This is called indirect materials, which means all materials, but not, let's say, easily traced to a specific unit or product. This includes also indirect labor costs that also cannot be easily or conveniently traced to a specific unit of product. Example, like the supervisor salary for a manufacturing process for tables or cars. The salary for the supervisor is called indirect labor. Why? Again, because the relationship between this cost and the single unit that we are producing, either to be a car or a table. Another example for the manufacturing overhead, the depreciation for the manufacturing equipment, the machines that we are using to produce our products, the depreciation for this machine is not easily traced to a specific unit. We cannot say that much is related to a table. It will be vary. It will be different between the tables if we assign the cost of the depreciation between number of tables. The utility costs are also a good example for manufacturing overhead. Suppose that we are adding or using electricity to produce our tables or cars. Is it the same amounts or cost added to every table? No. And we cannot easily know exactly what is the amount of electricity added to a specific table or one table. Okay. The property taxes, if we are paying property taxes for the building that we are doing our production in it, which means the factory. And here, be careful that we are talking about the factory taxes, which means we need to specify first, is this building using to production or for the administration? If we are talking about factory, then the taxes for this building is a manufacturing expense. But if we are talking about administrative taxes or the building related to the administratives, then we say that these costs are non-manufacturing. The insurance premiums incurred to operate a manufacturing facility. Also, if we are talking about insurance for a factory, for the building that we are using or we are doing our production in it, then the insurance for this building will be called manufacturing first, and then we will classify this insurance under the title of manufacturing overhead. All of these expenses important, and we cannot have a production without these expenses. Only those indirect costs associated with operating the factory are included in the manufacturing overhead, and this is important. Okay. Prime costs and conversion costs. We called the direct or the combination between the direct material and direct labor as prime cost. The word prime, which means principal or important, we don't have a product without the direct material and the direct labor. And we call the labor with the manufacturing overhead as conversion cost. The word conversion from the verb convert. Why? Because these two converting the direct material into finished goods. So we called prime costs for the DMDL, which is direct material, direct labor, and the conversion cost to represent the direct labor and manufacturing overhead, DL and MOH. If you remember the classification, we called it manufacturing costs and non-manufacturing costs. So manufacturing cost includes DM, DL, MOH, and the non-manufacturing cost include the selling expenses and administrative expenses. Look, the word non-manufacturing, which means we are not using these expenses inside our production. So we are not adding the selling expenses or administrative expenses to our table, to our car. We will separate these expenses under its titles, and this will be reported as expense in the income statement. For the manufacturing expenses, be careful that the direct material, direct labor, and manufacturing overhead will be converted into an asset called inventory. So we add the direct material, direct labor, manufacturing overhead, and the combination will be called as an inventory, and this will be reported as an asset in the financial position. But for the selling expenses and administrative expenses, this will be reported as an expense in the income statement. What is the selling expenses? These costs necessary to secure the order and deliver the product. Selling costs can be either direct or indirect. Then the selling expenses is something to help our product to be sold. For the administrative expenses, these expenses related to the administration, then all executive and organizational and clerical costs. Okay, so all of these costs are related to executives, related to the company as an organization. All of these expenses can be also direct or indirect. The main thing that the non-manufacturing costs are reported under the expense in the income statement and will not be an inventory in the financial position, which is the case of the manufacturing expense. Learning objective number 3, understand the classification used to prepare financial statements. Then we need to classify as product cost or period costs. The word product means all costs, includes all the costs that are involved in acquiring or making a product. So if you remember, we say we need 3 things to make our table: the direct material, direct labor, and the manufacturing overhead. All of these expenses are called product costs. Okay, so the product cost attached to a unit of product as it is purchased or manufactured, and they stay attached to each unit of product as long as it remains as an inventory awaiting for sale. So the important word here is inventory, and after completing our table, we will call it inventory awaiting for sale. And as you know, the inventory is classified under an asset in the financial position. Okay. For the product cost, this is the classification of the inventories in the manufacturing companies. If we say like Carrefour, Carrefour is a merchandising company. Okay, the word merchandising means buy and sell only. In Arabic we call it شركة تجارية. شركة تجارية يعني عندها مخزون فقط بتشتري وبتبيع. So if we say the inventory for Carrefour, we know that all the items in the Carrefour is finished goods or ready for sale. Okay, but if we are talking about a manufacturing company like نقل, fine نقل, a big company in Jordan, then if we say this company has an inventory, we have to classify which inventory are you talking about. Is it raw materials or work in process or finished goods? Then for the manufacturing companies, we need to classify the product into 3 products, or the inventory into 3 inventories. The first inventory is called raw materials, which means, or the raw materials include any materials that go into the final product, which means we didn't use it yet to produce our product. Okay, once we use the materials, we will convert the inventory from raw materials into something called work in process. The word work in process, sometimes they call it semi-finished, which means or consists of units of product that are only partially complete. and will require further work before they are ready for sale to the customer. So if you like, we are not selling from this inventory, and we are not selling our raw materials. We only sell from our finished goods, which is the last inventory classification for the manufacturing company. So the finished goods consist of completed. What is the meaning of completed? Completed means we finalize doing this product and it is ready for sale. So completed units of products that have not been sold to customers, but it is ready for sale. Again, the manufacturing companies have three inventories. The inventory that we are selling from is called finished goods, which means we complete manufacturing this product or these items, and it is ready for sale. For the raw materials, we use these raw materials only in the production, but we are not selling this inventory. And in between, we have something called semi-finished or work in process, which means partially completed. And again, we are not selling this inventory. Now, the transfer for the product cost. Look, when the direct materials are used in production, these costs are transferred from raw materials inventory to work in process inventory. It will not be a raw material because we start to use it, okay? But we didn't complete it in this stage, and this is called work in process. Okay, we need, in addition to the raw materials, direct labor and manufacturing overhead costs to be added to the work in process to convert direct materials into finished goods. Once units of product are completed, their costs are transferred from work in process to finished goods, or the account of work in process to the account of the finished goods. In this stage, the finished goods are ready for sale, So when a manufacturer sells its finished goods to customers, these costs are transferred from finished goods inventory to the cost of goods sold. It will become a cost of goods sold. And as you know, the cost of goods sold is apart from the income statement, and the finished goods is an inventory under the financial position. And the sequence for the product, look, the product costs include direct materials, direct labor, and manufacturing overhead. Until we sell it, it will become an inventory in the balance sheet or the financial position. And after sale, it will become a cost of goods sold, which means it will be in the income statement. For the period costs, all period costs are included in the income statement under the title of expenses. So these expenses or costs are not to be added to the product or the inventory. No, it will be an expense under the income or in the income statement. Which of the following costs would be considered a period rather than a product? Manufacturing equipment depreciation. No, this is a product. Why? Because it will be an overhead, an expense, or the third component of the manufacturing overhead. So this will be a product, or it will be added to the product. Property taxes on corporate headquarters. Look at this word, property taxes, but we're talking about corporate headquarters, not the factory property or building, which means this will be an administrative. So number B will be a period cost. Direct materials costs, no, this will be a product. Electrical costs to light the production facility. And this is also important, guys. The electrical costs to light the production facility, which means we use this costs in the factory, in the production facility, or the place that we are producing our products. This will be a product cost. The last one, which is E, sales commission. All selling expenses are period costs. So the answer will be B and E to represent the period costs. These are not product costs. The others will be product costs. Learning objective number 4, understand cost classification used to predict cost behavior. And we have 3 categories for the behavior of the cost. We have variable cost, fixed cost, and mixed costs. In this case, from these words, look at the behavior, the word behavior, and then we will expect that the costs will behave in 3 patterns: variable, fixed, and mixed. How? Costs will react to the changes in the level of activity. The word variable cost, which means this cost will vary in total, in direct proportion to the changes in the level of activity. Example, if we are using or producing tables, we need wood. We need 5 JDs to produce the first table. If we move to the second table, we need to pay 10 JDs for the wood. Third table, we need to pay 15, and so on. Then the wood for the table production is called direct material first, and it will be variable. Variable means it will be changed or increased if the level of activity increased. Okay. The other word, we are talking about variable costs here in total. But if we think about the variable costs for 1 unit, which means what is the wood used for the first table? It will be 5 JDs for our example. What is the wood used to the second table? It will be also 5 JDs. What is the wood used for the table number 100? It will be 5 also. So the variable cost per 1 unit will be constant. This is important. The cost of the wood for 1 table, it will be constant. Why? Because we are paying the same cost for the materials to produce each table. So the variable cost per 1 unit will be constant. The word cost driver, cost driver. If we're talking about tables, then the cost driver will be the unit produced. The word cost driver means a measure of what causes the incurrence of the variable cost. Now, for our example, what causes the cost of the wood to be or to increase? The answer is we need more tables in order for this cost to be increased or incurred, which means the cost driver for this example will be the units produced. If we are talking about our cars, what causes the fuel cost or the electricity for electrical cars? The miles driven. So the more the miles driven, the more costs for the fuel or the electricity. Then this will be the cost driver for the fuel cost. If you are talking about labor hours, if we need more employees to produce our tables, then we are paying more for labor cost. Then the cost driver for our costs will be the labor hours. If we need more labor hours, then we have to pay more wages or salaries. This will be a cost driver for the labor cost. And another example for the machine hours. Once we need the machine to work more, then we need to pay more depreciation, let's say, more maintenance. This will be a cost driver for the machine costs. Okay, so once we have more machine hours, we have to pay for maintenance, for depreciation, and this is the cause. This is the reason why we are paying more for maintenance, let's say. This is for the variable costs. Okay. The second example is the fixed cost. A cost that remains constant in total, regardless of changes in the level of activity. If we think about rent, suppose that we are paying 30,000 rent for our facility, for our factory. It is not depending on how many units do we produce. Then this expense will be constant in total to a limit, regardless the changes in the level of activity or the tables produced. Okay, but if we think about the fixed cost per 1 unit, if we produce one car, let's say, all the 30,000 paid for the rent will be allocated, will be assigned to that car. If we produce 2 cars, then the 30,000 will be distributed into 2 cars. Well, if we produce more cars, the rent of the facility, the factory, will be distributed into more cars. Then, if we express on a per unit basis, the average fixed cost will varies inversely with the changes in the activity, which means the fixed cost per 1 unit will be declined if we have more units. Okay, so we have variable cost in total, variable cost per 1 unit, fixed cost in total, fixed cost per 1 unit. Okay. The types of the fixed cost is not important. Committed, which is the long term, cannot be significantly reduced in short term, and discretionary may be altered in the short run by current managerial decisions. Don't worry about it. Look at the line, and they called it relevant range. We can manage our costs to a range. If we exceed that range, then the cost will be different. The relevant range of activity pertains to fixed costs as well as variable costs. For example, assume office space is available at a rental rate of 30,000 per year in increments of 1,000 square feet. Fixed costs will increase in a step fashion, and this is called step variable fixed cost, step fixed cost. What does that means? If we need 1,000 square feet, look at this graph. If we need 1,000 rent square feet, we are paying $30,000. Okay. If we need more space, then the cost or the rent cost, it will not increase gradually. No, we have to jump for another level of costs, which means we need another room. Let's say the room is 1,000 square feet. If we need more 1 square feet, we don't have an option to have 1 square feet only. We will have another room, which is another 1,000 square feet. Then the rent will jump to 60,000. And this is called step fixed cost. Okay, step fixed cost. In this case, the relevant range is up to 1,000 only. And another example, if we need more space, then we have to add another room or another 1,000 square feet, and the cost of the rent will jump directly to $90,000. The relevant range of activity for fixed cost is a range of activity over which the graph of the cost is flat. This is called step. Why? Because the graph is a step shape. Okay. This is a summary comparison between the variable fixed in total and per unit. Which of the following costs would be variable with respect to the number of ice cream cones sold at a Baskin Robbins? There may be more one correct answer. The cost of lighting the store, is it variable? Don't think so. No, because in all cases we are lighting the store. If we produce or sell one ice cream or 100, the lighting is the same. So this will be fixed. The wages of the store manager, the salary of the store manager will be fixed regardless how many ice creams that we are selling, right? The cost of the ice cream, yes, it will be variable. The cost of napkins for the customer, yes, will be variable. Why? Because it changes with the activity or the ice creams that we are selling. So the last two will be variable. The first two will be fixed. The word mixed costs, The word mixed contains both variable and fixed elements. Consider the example of utility cost. A good example for the mixed cost is a utility cost. We are paying, let's say, 30 JDs. If we use our electricity, let's say for 1,000 kilowatts, right? After that, if we exceed the 100, we will pay depending on the kilowatt, which means it will start fixed and then it will gradually increase. And this is an example of the mixed cost. Mixed means it will be a fixed and then it will be gradually increased. So the total mixed cost in this graph started from the edge of the fixed cost. The first red line horizontal, which is the fixed cost, and the space here is the fixed monthly utility expense or cost or charge. And then after that, it will be mixed or variable, and it will be increased gradually. So the mixed cost will start from the fixed cost and increase gradually depending on the kilowatts. The total mixed cost line can be expressed as an equation. Y is equal to A plus BX, where Y is the total mixed cost, A is the total fixed cost, the vertical intercept for the line, which is the fixed cost, the B, which is the variable cost per 1 unit, which is or represent the slope of the line, and this is fixed or constant, and the X is the level of activity. Let's have an example about the mixed cost. Suppose that our fixed monthly utility charge is 40. In all cases, we are paying $40 as a fixed monthly utility cost. Your variable cost is 0.03 per kilowatt hour, and your monthly activity level is 2,000. Okay, kilowatt hours. What is the amount of your utility bill? We will say in all cases I will pay the 40. The 40 is to represent the fixed cost, which is the A in our equation. Okay, and B will be $0.03 per 1 kilowatt, multiplied by the X, which is 2,000, which is the kilowatts that I use in from the kilowatts or the electricity. And then the 0.03 multiplied by 2,000 will be 60. $60 will be the total variable cost. The $40 will be the fixed cost. So the total bill will be 100. Okay, 100. Analysis for the mixed cost, account analysis and the engineering approach. Okay, we will use the accounting approach for the mixed costs. Okay. Analyze the mixed cost using the scatter graph plot and the high-low method. I will stop here then for this lecture, and I will start next time from analyzing the mixed cost using the scatter graph and, more important, the high-low method. Okay. Thank you.